Imagine a stablecoin that generates massive yields while promising full decentralization. Sounds too good to be true, right? Well, that's exactly what Ethena's USDE aims to deliver. But is it the holy grail of DeFi or just another over-leveraged experiment waiting to implode? With its rapid rise, massive institutional backing, and a model unlike anything we've seen before, Ethena is capturing the attention of crypto enthusiasts and skeptics alike. Welcome to the Chainpoint channel. In this video, we're diving deep into the origins, mechanics, and risks of Ethena's USDE. We'll explore how it works, its explosive market growth, and whether its innovative approach can truly disrupt the stablecoin landscape. Some experts are already drawing parallels to Terra's catastrophic collapse. Could Ethena be the next big thing in crypto, or are we witnessing history repeating itself? Let's find out. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. The dream of a truly decentralized stablecoin has haunted the crypto space for years. Imagine a digital dollar that isn't controlled by governments or corporations, but still holds its value just like fiat. This is the ultimate goal of DeFi. Projects like DAI, Frax, and the infamous Terra USD have all attempted to achieve this, but none have struck the perfect balance between stability, decentralization, and scalability. With regulators tightening their grip on traditional stablecoins like USDT and USDC, the need for a decentralized alternative is greater than ever. Terra USD was once hailed as the pinnacle of decentralized stablecoins, until it imploded in 2022, wiping out billions overnight. The collapse of UST was a brutal reminder that algorithmic stability mechanisms are fragile and that DeFi is still in its experimental phase. Ethena's USDE enters the scene promising to succeed where others have failed, learning from past mistakes while introducing a new approach to stability. But the big question remains: can it truly withstand the pressures of market volatility and regulatory scrutiny? Unlike UST, which relied on an unsustainable mint and burn mechanism with Luna, Ethena employs a novel approach centered around futures trading and collateralized positions. This hybrid model aims to provide price stability while simultaneously generating yield for its holders. If executed correctly, this could be a game changer. However, history has shown that over-reliance on financial engineering can lead to disastrous consequences, making some investors wary of Ethena's ambitious vision. Despite skepticism, Ethena's early traction is undeniable. The project has already attracted billions in capital and institutional backing, signaling that big players see potential in its model. The ability to generate yields as high as 40% through futures trading has piqued the interest of DeFi enthusiasts looking for high returns. But as we've seen before, high rewards often come with high risks. The key question is whether Ethena has the safeguards necessary to avoid the fate of its predecessors. So, is Ethena the holy grail of crypto, or just another experiment destined for failure? Its approach is certainly intriguing, and its rapid adoption suggests there's strong demand. However, with great ambition comes great risk. As we dive deeper into Ethena's origins, we'll explore whether this project has what it takes to redefine stablecoins, or if it's walking a dangerously familiar path. Ethena's journey began with an idea sparked by Arthur Hayes, co-founder of BitMEX. In one of his blog posts, Hayes proposed a stablecoin design that could withstand market volatility and remain truly decentralized. Inspired by this vision, Guy Young took the concept and built Ethena, securing early funding from notable investors. The project quickly gained traction, attracting $6,500,000 in funding in 2023 from crypto venture firms. By 2024, Ethena had secured an additional $14 million from institutional giants like Fidelity and Brevan Howard, solidifying its position as a serious contender in the DeFi space. Unlike previous stablecoin experiments, Ethena aimed to create a resilient financial instrument that wouldn't collapse under extreme market conditions. Traditional algorithmic stablecoins often fail due to unsustainable backing mechanisms, but Ethena's model sought to change that. By utilizing a combination of collateralized assets and futures trading strategies, USDE promised to maintain its peg while offering lucrative yield opportunities. This approach was seen as a fresh alternative to past failures, but questions remained about its long-term viability. From its inception, Ethena positioned itself as an institutional-grade DeFi protocol, bridging the gap between decentralized finance and traditional financial systems. By attracting investors from both sectors, it hoped to build a more robust foundation for its stablecoin. The involvement of major players such as Fidelity gave Ethena an air of legitimacy, helping it sidestep some of the regulatory scrutiny that often plague stablecoin projects. However, institutional involvement also raised concerns about potential centralization and external influence. The rapid adoption of USDE highlighted the market's hunger for innovation in stablecoins. Ethena's ability to raise capital and deploy its model at scale suggested confidence from both retail and institutional investors. Nevertheless, the road ahead was uncertain. Would Ethena's unique blend of financial engineering and decentralized mechanics hold up under pressure, or was it simply another experiment waiting to unravel? As Ethena's market presence grew, so did speculation about its future impact on DeFi. Its ability to navigate the challenges of adoption, regulation, and market turbulence would determine whether it could truly become the next evolution of stablecoins. Up next, we'll take a closer look at Ethena's market growth and how it has maintained stability amid the volatile crypto landscape. Ethena's USDE stablecoin launched in February 2024 with significant hype, quickly amassing a market cap of $4 billion. This meteoric rise was fueled by both retail and institutional investors eager to explore a new, decentralized stablecoin model. However, as initial excitement settled, USDE's market cap stabilized around $2.5 billion, reflecting a more sustainable level of adoption. This adjustment was a natural correction, demonstrating the resilience of the project despite market volatility. A key factor behind USDE's stability has been its innovative financial engineering. Unlike algorithmic stablecoins that rely on arbitrage mechanisms, USDE employs a collateralized approach, backed by assets such as BTC, ETH, staked ETH, and stablecoins. This diversified collateral pool has helped maintain the peg while minimizing the risk of catastrophic failure. Furthermore, Ethena's use of delta-neutral strategies ensures that its value remains largely unaffected by market fluctuations. Liquidity and adoption are critical in the DeFi space, and Ethena has successfully positioned itself as a viable alternative to traditional stablecoins. With deep liquidity across major exchanges and DeFi protocols, USDE is actively being utilized for lending, borrowing, and yield generation. The expansion of its ecosystem has further reinforced its stability as more protocols integrate USDE into their offerings. This has allowed it to remain competitive against centralized stablecoins like USDC and USDT. Despite these achievements, skepticism remains. Critics argue that USDE's reliance on centralized custodians for collateral storage contradicts the ethos of decentralization. Additionally, while the project's risk management strategies have been effective so far, concerns about potential liquidation cascades in extreme market conditions persist. As DeFi matures, Ethena must continue refining its model to address these challenges and maintain investor confidence. Next, we'll dive into the mechanics of how Ethena operates and the strategies it employs to keep USDE's value secure. Ethena's approach to stability revolves around futures trading and collateralized positions. Unlike traditional stablecoins that depend on reserves of fiat or algorithmic mechanisms, Ethena leverages delta-NEML strategies to maintain price equilibrium. By holding both long and short positions in the futures market, the protocol offsets risks and ensures USDE remains pegged to the dollar. This innovative model sets ETH apart from previous stablecoin projects that suffered from design flaws. One of the core revenue streams for Ethena comes from traders paying funding rates on perpetual futures contracts. When markets are bullish, long traders pay high fees to short traders, and Ethena captures these fees as yield. This mechanism has enabled USDE to offer significantly higher returns compared to traditional stablecoins, making it an attractive choice for yield-seeking investors. However, the sustainability of this model depends on consistent trading volumes and market conditions that support funding rate imbalances. To ensure long-term stability, Ethena implements a multi-layered risk management framework. The protocol dynamically adjusts exposure by monitoring market conditions and adjusting collateral allocations accordingly. This includes actively managing hedging strategies to reduce the risk of liquidation cascades during high volatility. Additionally, Ethena incorporates automated circuit breakers that trigger emergency measures if market fluctuations exceed predefined thresholds, protecting the peg from extreme instability. To further stabilize USDE, Ethena enforces strict risk parameters, including liquidation mechanisms and an insurance fund. These safeguards are designed to protect the system from black swan events and market crashes. The protocol's 7-day lock period for staking also prevents sudden liquidity exits that could destabilize the peg. While these measures add security, they also limit flexibility, which may deter some users from adopting USDE for day-to-day transactions. As Ethena continues to evolve, its ability to adapt to shifting market dynamics will determine its long-term viability. Can its futures-based stability mechanism withstand extreme volatility, or will it suffer the same fate as past experimental stablecoins? Ethena's governance model is built around its native token, ENA, which plays a central role in decision-making and ecosystem incentives. Token holders can participate in governance proposals, influencing protocol upgrades, risk management policies, and treasury allocations. This decentralized governance structure is intended to align the interests of developers, investors, and the broader community, ensuring that Ethena remains adaptable and transparent as it evolves. The total supply of ENA is capped at 15 billion tokens distributed across multiple stakeholders. A portion of the supply is allocated to ecosystem development, core contributors, early investors, and the Ethena Foundation, with a structured vesting schedule extending until mid-2028. This gradual release of tokens helps mitigate inflationary pressure while ensuring long-term sustainability. However, critics argue that the concentration of ENA among early investors could lead to governance centralization, a common concern in DeFi projects. Staking is another crucial aspect of Ethena's tokenomics. ENA holders can stake their tokens to earn a share of the platform's revenue, primarily derived from USDE's yield-generating strategies. This model not only provides incentives for long-term holding, but also strengthens network security and liquidity. Market sentiment towards ENA has been mixed since its launch. While early adopters were optimistic about its potential, the token experienced a decline in price due to broader market conditions and uncertainty about Ethena's long-term viability. Analysts speculate that as the DeFi ecosystem matures and Ethena gains further adoption, ENA's value could see significant appreciation, potentially mirroring the growth trajectories of past successful governance tokens. The future of Ethena's governance and tokenomics depends on its ability to maintain decentralization, ensure fair participation, and foster a strong community. As we look ahead, the protocol's ability to scale and integrate with the broader DeFi ecosystem will be crucial in determining whether ENA can establish itself as a cornerstone asset in decentralized finance. Next, we'll examine the potential risks and concerns surrounding Ethena's model and its implications for long-term sustainability. Ethena's innovative model introduces opportunities but also carries significant risks. One of the primary concerns is its reliance on excessive leverage. By using a futures-based stability mechanism, Ethena may inadvertently encourage high levels of leverage, which could become unsustainable in volatile market conditions. If too many traders take leveraged positions against USDE's structure, the system might struggle to maintain balance, leading to liquidity issues and potential liquidation cascades. Another key risk is Ethena's dependency on centralized stablecoins. While USDE aims to be a decentralized alternative, a substantial portion of its collateral currently consists of assets like USDT and other centralized stablecoins. This reliance contradicts its decentralization ethos and could expose the protocol to regulatory scrutiny or issues stemming from centralized entities. If a major stablecoin faces regulatory restrictions or depegging events, Ethena's collateralization model could be put under severe stress. The broader market's unpredictability presents another challenge. Ethena's ability to generate yield depends heavily on favorable market conditions, particularly funding rates in the futures market. If market sentiment shifts or funding rates decline, USDE's attractive yield could shrink, potentially leading to capital flight. Additionally, as seen with past DeFi projects, periods of extreme volatility could test the resilience of Ethena's peg maintenance strategies. Security is a major concern for any DeFi protocol, and Ethena is no exception. Smart contract vulnerabilities, potential exploits, and reliance on custodians for collateral management introduce multiple points of failure. While Ethena has implemented an insurance fund to mitigate risks, it remains to be seen how effectively these measures can handle black swan events or targeted attacks. Ultimately, Ethena's success hinges on its ability to navigate these risks while continuing to innovate. As we explore its future roadmap and broader impact, the key question remains, can Ethena strike the right balance between decentralization, stability, and profitability, or will it face the same pitfalls that have plagued past ambitious stablecoin projects? Ethena's roadmap is focused on expanding USDE's adoption within DeFi and beyond. One of its key objectives is to challenge the dominance of centralized stablecoins like USDC and USDT by positioning USDE as a decentralized alternative. To achieve this, Ethena is actively pursuing integrations with major DeFi protocols, aiming to enhance USDE's utility in lending, borrowing, and liquidity provisioning. As the ecosystem matures, broader adoption could drive increased stability and trust in USDE as a reliable digital dollar. Beyond DeFi, Ethena envisions a future where USDE competes directly with traditional financial instruments. The project is exploring ways to position USDE as an alternative to government bonds, offering competitive yields that attract both retail and institutional investors. This ambitious vision seeks to bridge the gap between decentralized and traditional finance, making USDE a viable asset for wealth preservation and yield generation in uncertain economic times. To support its expansion, Ethena is also developing a new blockchain network tailored for enhanced efficiency and interoperability. By creating a dedicated infrastructure, the protocol aims to improve transaction speeds, reduce costs, and facilitate seamless integrations with existing DeFi platforms. This strategic move could position Ethena as a foundational layer for decentralized financial applications, fostering a more robust and scalable ecosystem. Despite its ambitious plans, Ethena's future depends on how well it can navigate regulatory challenges. As governments and financial authorities tighten oversight on stablecoins, Ethena must ensure compliance while maintaining its decentralized ethos. Striking this balance will be crucial to sustaining long-term growth and avoiding regulatory roadblocks that have hindered other stablecoin projects in the past. Ultimately, Ethena's ability to execute its vision will determine whether it can redefine stablecoins or become another ambitious experiment that struggles to gain traction. With a growing ecosystem and strategic initiatives underway, the project has the potential to leave a lasting impact on the financial landscape. The next phase of Ethena's journey will reveal whether its innovative approach can truly reshape the future of decentralized finance. So, is Ethena the future of DeFi or a ticking time bomb? We've explored its groundbreaking approach from yield generation to its novel stability model. The potential is undeniable. USDE could redefine decentralized finance as we know it. But with great ambition comes great risk. Excessive leverage, reliance on centralized stablecoins, and untested market conditions could spell disaster if things go south. Now it's your turn. Do you believe Ethena is the next big thing in crypto, or do you see warning signs that remind you of past failures like Terra? Drop your thoughts in the comments below. Let's get this debate going. And if you enjoyed this deep dive, don't forget to smash that like button, subscribe, and turn on notifications for more in-depth analyses on the most disruptive projects in the crypto space. See you in the next video.